It's Monday, January the 11th. Welcome to Business Incorporated. I'm Chimeze Obi-Wagu. Coming up, Abraj Group, a leading private equity firm, announces acquisition of a significant minority stake in Algeria's cellulose processing Sepro. Nigeria's Debt Management Office DMO releases calendar for government borrowing via the bond market in the first quarter of 2016, totaling about 370 billion naira. Plus, the International Monetary Fund warns Central African economy affected by low oil prices and security threats. And the Abraj Group, a leading investor operated in global growth markets, has announced the acquisition through its second-generation North Africa fund of a significant minority stake in cellulose processing Sepro, a leading manufacturer and distributor of baby diapers and feminine sanitary pads in Algeria. Abraj, in partnership with Sepro's founding Mary family, will draw on its significant investment enterprise to increase production capacity and efficiency, diversify Sepro's product offering, enhance marketing efforts through a new branding strategy, and expand its network by developing new distribution channels in Algeria and sub-Saharan Africa. Standard Life Investment, a major investor in Royal Dutch Shell, says it will oppose the oil company's proposed takeover of BG Group. According to the company, a weak outlook for oil prices plus risk for BG in Brazil could make the deal value destructive for Shell shareholders. Few investors have openly challenged the deal's strategic benefits for the firm. Shell said it remained confident of winning the vote. Shell has also won the support of Institutional Shareholder Services, an influential advisory firm, which recommended on Friday that Shell shareholders support the deal. Shell and BG shareholders will vote at separate meetings on 27th and 28th of January. Well, the Bank of England's rates decision is on Thursday this week as the drums of Britain's exit from Eurozone sounds louder. Earnings season kicks on Wall Street today with Alcoa, and of course, there is the Saudis' Aramco's IPO. Let's bring in DWTV Channels TV correspondent now, Ulrich Batz, standing by at the Frankfurt Stock Exchange. Hello, Lee. Good to have you on the show.
Thank you. Good to be on.
Well, Lee, let's start with the Saudis' Aramco's IPO news on the street. If and when it happens, would it be a game changer for the markets, and why?
It could be a game changer for the oil industry shares, that's for certain, because it's by far the largest crude oil producer in the world. And, reading reports about the market value, it just almost knocks you off your feet. And because it has such a high market value, it could, of course, be a problem for other oil companies, maybe siphoning off some interest there, some shareholders, because of the sheer size of it. How big is it? There are estimates that the market value of the whole company, Aramco, could be about $1 trillion. Now, that would be about double what Apple is, about 3 times what Exxon, the oil company from the United States, is. And some people say even the market value could be much in excess of that. Now, the IPO itself, that also is an estimate. We don't know yet. It's not finalized yet. It's going to take some months, but could be, of course, a lot smaller than the whole market value. But it would still be a major addition and could be a game changer for at least the energy shares in the world market.
Now, earnings season kicks on Wall Street today with Alcoa. What do we have on tap this week from the European market, please?
Well, the European markets have started off on an unsteady note. You can see the curve the DAX is having behind me. It started off well, people hoping to leave that bad China week, the first week of the month, behind them. But still, China worries out there, economic worries out there, the low oil price being seen as a burden rather than an opportunity. And earnings season, yes, Alcoa is starting today after the close of Wall Street. That's some hours away still. And the forecasts for the earnings seasons don't sound all that great. People say that the S&P 500 growth In total, for the companies, the profit growth will be down by about 4%. But in a market like this, there are bound to be some positive surprises. Surprises of profits going up more than expected, and especially in such a market that, of course, could be a boon, a support to many other shares.
Now, the Bank of England's rates decision is on Thursday this week as the drums of Brexit sounds louder. Brexit, that's what they call it. Now, are there serious concerns in mainland Europe about the state of and the future of UK's economy?
There certainly are. The British economy also has shown signs of slowing down in the past few months. Figures just released recently said that the economy has still grown, but grown more slowly. And this, of course, is good news on the one side for all people who have credit and for the equities market in a way, because that releases pressure off the Bank of England to raise rates anytime soon. It meets this week, probably no rate increase expected now. The Brexit, that Britain leaving, exiting the European Union, now that's a different story. Everyone I talk to is worried about that. Perhaps not because of the sheer economic dimension of it. Lots of people say, looked at only from an economic point of view, it's worse for the British than it is for the Europeans. It would have some impact here, but it wouldn't sort of spoil the whole show. But the political signal can't be overlooked. If Britain leaves, then that's a major problem for the European Union and could signal the way to a downward spiral, also fueling the interests of many protest parties. The consequences of that can't be underestimated, people say here.
Right, thank you for your time, Uli. Do have a beautiful day. Well, that was Ulrich Butts, DWTV Channels TV correspondent. After the break, Asian shares suffer losses amid China confusion. Do stay with us.